This is TikTok by Bloomberg's coverage of the closing bell at the New York Stock Exchange, and what a day it has been for markets as the second quarter gets underway. I'm TikTok's David Myers, and joining me on the phone is Bloomberg TV senior markets reporter Julie Hyman. Julie, we're moments from the closing bell. Paint a picture for us where things stand right now with the major indices.
So the major averages are still deeply in the red, but well off the lows of the session, which is different than we have seen in recent sell-offs where stocks closed at or near the lows. For example, the S&P 500 at one point today fell as much as 3.3%. Now it's down 2.3%, which is still, again, a steep decline, but not as steep as it was earlier in the day. And if you look at the breadth also, it's notable today. All 11 sectors in the S&P 500 are trading lower. Consumer discretionary, which is a group that actually includes Amazon and Netflix, is trading down the most, followed by tech, consumer staples, and industrials. So a lot of stocks down, and even though it's not as deep as it was earlier, the breadth is something notable, with only 14 stocks in the S&P 500 up at the moment.
As you mentioned, Amazon is down. It seems as the tech sector goes south, so does the overall markets. So let's break down Amazon a little, Julie, and the latest salvo in what seems to be President Trump versus Jeff Bezos. What's going on here, and why did it drag down markets?
It's pretty much more of the same from the president, where he has attacked Amazon, claiming it doesn't pay state income tax, claiming that it is being propped up by the U.S. Postal Service and somehow is disadvantaging the Postal Service, although there is a lot of evidence to suggest that neither of those things is the case. There is still this uncertainty and this concern that Amazon will be regulated in some way. Now, whether that's a real concern and the real reason why Amazon's down so much over the past week or so, or if it's more a matter of how well it had done and that now we're seeing some folks pull back and take profits, that is not entirely clear. But certainly that's one of the factors here, this sort of increased attention from Washington, not just on Amazon, of course, but companies like Facebook as well over its privacy practices. All of that focus and questions about what effect, if any, it's going to have on those companies' profits.
If you're just joining us, you're watching TikTok by Bloomberg's coverage of the New York Stock Exchange closing bell. We're just about a little under a minute from the close of trading on the day, and we're joined on the phone by Bloomberg TV senior markets correspondent Julie Hyman. Julie, you talked about the wide array of today's sell-off. It was more broad-based, as you put it.
Yes, definitely more broad-based. It wasn't just technology today. As I mentioned earlier, a quirk of the S&P 500 is that Amazon and Netflix, for example, are in the consumer discretionary index. They're not actually in the tech index. So it was consumer discretionary that did the worst on the day. And in addition to those two companies, you have the auto parts makers really getting hammered on the day. We're going to get the monthly auto sales numbers for last month that are coming out tomorrow. So we should learn more there. Tesla, a really notable mover on the day. The company is due to report its earnings and its production, more importantly. And so there are a lot of questions about whether it's been able to ramp up production of its Model 3. As always, there are questions about how much cash it's burning over at Tesla as well. And then there was a really interesting scoop from Bloomberg News that Apple is planning to move away from Intel to Mac chips, its own chips. From 2020. So that's a big blow to Intel, and those shares traded down sharply on the day after those headlines came out. Intel right now down by about 6%.
Well, there was, Julie, the closing bell. So the first day of 2Q is over. Where did we land for the day?
So the Dow finishing the day down about 462 points at 23,640. That's a decline of 1.9%. The S&P 500 off 2.25% at 2581, and the Nasdaq, the big loser of the three, down 2.75% at 6870. And the Nasdaq has really been the laggard here recently, even though the Nasdaq is still the best performer of the three major averages year to date. And in the first quarter, it is over the past couple of weeks, it's really taken a tumble, and it's now actually negative on the year. The Nasdaq Composite now off 0.5% for the year. That's a flip that happened during today's session.
So if you put, you look at this, the Nasdaq is down, the Dow down. Put this all into context for us, though. Is this really bad?
It depends on who you talk to. Most of the Wall Street strategists who we talk to and hear from regularly are still relatively positive on how the year is going to go. They say, well, this is just a process of return to normalcy for the markets. 2017, there were very small swings in stocks on an intraday basis, very little volatility. The volatility is coming back, so it's sort of this digestion normalization period that we're going through right now that causes these big swings. It's possible that there could be more of something going on, but it's unclear right now. For example, if you do get more regulation from Washington of the tech industry, will that have an effect on earnings? Unclear. Will what we're seeing happen with tariffs develop into a full-blown trade war that will affect earnings? Unclear. So there are some questions. What effect is the Fed tightening going to have? We have seen some increases in something called LIBOR rates, which is the London Interbank Offered Rate. Essentially what it means is that the money that banks are lending to each other is now being lent at a higher rate. So interest rates are starting to go up. So all of these things are sort of simmering. It's unclear at this point if it's going to be detrimental to the economy or the stock market on a longer-term basis. At this point, it doesn't look like that's the case yet.
If you're just joining us, you're watching TikTok by Bloomberg's coverage of the New York Stock Exchange closing bell. We're joined on the phone with Bloomberg TV senior markets reporter Julie Hyman. Dow settling at down 459 points. The S&P closes at its lowest in 5 months. Julie, was there any good news today?
It depends on what you consider good news, I suppose. There was an interesting story out about the health insurer Humana and Walmart. There were some reports over the weekend and into today that the two, which already work together on some various projects, that they might tighten their partnership. Humana is a big health insurer. It serves Medicare patients in particular, and so there was some talk that it and Walmart could team up in some kind of more extensive way. So Humana shares rose on the day, and we saw a little bit of strength in other health insurance. So Humana up 4.4%. But in terms of stock action on the day, you'd be hard-pressed to find stocks in the S&P 500 that were higher, but any other sort of stories that were boosting stocks even on the smaller cap side.
Let's take a look to tomorrow, Julie, and really the rest of the week. What are you keeping an eye on that could turn things around or actually make them worse?
Well, on a very micro level, Tesla is really going to be interesting to watch to see how those production numbers look. Over the weekend, Elon Musk of Tesla tweeted what some considered in poor taste April Fool's joke about Tesla going bankrupt. They considered it perhaps in poor taste because there was a fatality involving a Tesla vehicle last week, and it came out that the autopilot function, which is an autonomous driving function, was engaged on the car. So given that, there was some criticism of Musk. There was also a theory that, well, he wouldn't have done this joke if he was pessimistic about how the production numbers are going to look. So there's a lot of attention being paid to those numbers. More broadly, as I mentioned, we're going to get the monthly auto sales numbers for the U.S. For the month of March. They're coming out tomorrow. And then on Friday is the next jobs report. And so that's going to be key as well for the market. And the same day, Jay Powell, the Fed chair, is making a speech. So some important events to look ahead to this week.
Bloomberg TV senior markets reporter Julie Hyman, thanks for joining us. You can